Hi, this is Rony Mullick, and you are watching the post market show. So, as expected, markets are trending down, and Nifty today opened with a slight gap up and then continued to move down throughout the day. So, no such volatility or zigzag movements there, but Bank Nifty was volatile, and Bank Nifty did move down as well. But let us get into the charts and see what has happened. So, Nifty, this is the Nifty's chart. You can see it opened with a slight gap up, so nothing that significant. And we talked about 18660 acting as a resistance, and immediately that was taken as a resistance. Markets came down again around 10 o'clock. Markets tried to break that level, could not, and then finally the fall started. And we talked about 15,000 18,585 acting as a support. It did act as a support until 1:45 p.m., but then it markets broke that level and closed at the lowest point of the day at 18,567. So Nifty down by 0.38 percentage or 71 points. If you look at Bank Nifty, this is where it is interesting. Bank Nifty opened with a gap up and moved down, but again it immediately shot up around 10 o'clock, and then you see the beautiful resistance being taken till 12:30 p.m. around 44,151. We talked about this. This was the previous all-time high, and markets tried multiple times breaking this level previously as well, and it could not happen. And today, same thing. You can see the importance of 44,151. Markets could not break it, then came down after 12:30. The fall started. Like in Nifty, Bank Nifty also came down, and it ended again below 44,000, ending at 43,989. It is slightly down 0.01 percentage, and the day's entire gains were wiped out. So Bank Nifty just ending flat is what we can see, but important to note that it is below 44,000 for the second straight day. Nifty mid cap, small caps. We talked about yesterday a huge red candle forming, a bearish engulfing candle forming, indicating bearishness ahead, and that has continued today. It has been bearish, although did not fall in a massive manner, but it's down by 0.14 percentage, and Nifty small cap was also down by 0.06 percentage. You can say it's almost flat. So that is the situation. Like yesterday, only two sectors ending in the green, and today this is Nifty Private Bank, so that is in the green and it is up by 0.23 percentage. And then we have Nifty Reality, which is almost flat, 0.04 percentage, and rest all sectors ending in the red. And leading the fall is Nifty PSU Bank sector, down by 1.21 percentage. And then obviously we have FMCG for the second straight day, a huge downfall. You can see from yesterday 0.92 percentage down. Then we have Nifty IT as well, breaking the important support of 28,576. So more bearish days ahead maybe for IT index, so that has to be seen. This is the current situation right now, and markets seems to be in the bear hold, and because we had ample chances for the markets to break out above those levels, and that did not happen. So the bulls or the buyers are trying to give up now probably. So that is when the sellers are coming in, and they did not get an opportunity to sell for so many days. So that is the situation right now. Coming to index movers, we have most of the sectors again ending in the red. So stocks which ended in the green are Axis Bank, L&T, the Bank, Power Grid, HDFC Bank, Bajaj, Finserv. So some PSU banks are there definitely, and top losers include Infosys, and that has fallen by 1.3 percentage. Reliance, it is a Nifty heavyweight, that has fallen by 0.7 percentage. ITC has fallen by 1 percentage, and Hindustan Unilever down by 1.6 percentage. So both of these are the have the largest weightage in the FMCG sector. So definitely FMCG is down because of these two stocks falling, both ITC and Hindustan Unilever. So this is the situation, and SBIN, which again has the highest weightage among the PSU banks, down by 1.67 percentage, thereby dragging down the PSU bank index. FII activity looks interesting. DII is buying for a whooping 1245 crore, and FIIs have turned net sellers once again, selling by around 308 crore. So that is the institutional activity, and it looks like if not for the DIIs, markets would have fallen further, because DIIs have bought for more than 1200 crore, and still the markets have fallen. So you can imagine if they had not been buyers, what could be the magnitude of the fall. So that is definitely interesting to see. Talking about economic data, we talked about only one data coming out today that is important. Chinese inflation data expectation was 0.3 percentage, came out lower than that, came out 0.2 percentage. Lower inflation is good for the economy. So that is that. So these are the events for the day. Let us see the US markets. It's a Friday, and let's see what has happened in the US markets. So right now, if you look at it, US markets are kind of flat to positive slightly. So it opened with a gap up, and now it is coming down. S&P 500 0.1 percentage up. Dow Jones almost flat, 0.02 percentage, 3% in the red, and Nasdaq slightly up, but again facing resistance at the upper levels in Nasdaq. So overall, US markets are flat is what we can see. UK markets are kind of weak, 0.67 percentage down. German markets and French markets have slight bearishness, but that's significant. So, and Asian markets are doing well. Hong Kong market up by 0.47 percentage. Japanese market, once again, it is up by 1.97 percentage after 2 consecutive days of fall. So that is interesting. And Korean markets are also up by 1.16 percentage. So Japanese Korean market are doing pretty well. As you can see, they have been on an uptrend for quite some time now. Coming to the volatility index, India VIX has again fallen by 1.22 percentage because the fall in the indices was kind of gradual, and throughout the day it fell. So no spikes happening. Overall, VIX is 11.12. So again, very, very low VIX environment is what we are seeing. US VIX has increased by 2.05 percentage right now. Crude oil prices, let's look at that. It's stable around 71, not moving anywhere, not having so much significance. And apart from that, nothing much has happened in commodities. Dollar index, let us look at that. Dollar index, after falling, has spiked up again by 0.2 percentage, and probably that is why US markets, although opened and moved up, and still it is coming under selling pressure, some kind of that is the bearishness we are seeing, possibly because of DXY gaining strength. This is the current situation in the market. Let us look at the open interest, and obviously it goes without saying people are very, very bearish. This is the 15th of June, which means the next Thursday's expiry, the third expiry of June, and June is a 5-week 5 expiry series. So we're already done with 2 of them, and the next is on 15th of June. And you can see today intraday 18,600, 650, 700 calls added huge open interest. 18,700 having the highest call build up among the weekly calls. On the put side, we don't see much of a build up. 18,600 has some kind of put build up, and 18,700 and 18,600 having some little amount of put build up. So most of the options have been written on the call side. Thereby put call ratio is looking very, very bearish. It is down at 0.63. This is Nifty. Coming to Back Nifty expiry, and Back Nifty again massive amount of calls being written across board today. If you look at intraday, just the levels 44,000, 44,100, 200, these 3 levels have added huge amount of call open interest. And on the put side, 44,000 added some amount of put, and overall we are seeing that 44,000 straddle is being sold a lot. So that means people are expecting the combined premium, that is 270 and 290. That gives us around a range of let's say 500 points approximately. So that is the range people are expecting. So that is the current situation, but a lot of calls have been written aggressively in Back Nifty, and on the put side nothing much activity has gone on. So put call ratio is also pretty low. It is at 0.69, indicating bearishness in Back Nifty as well. So all of a sudden markets have turned bearish. Just 2 days back on Wednesday we were seeing the markets moving to higher levels, but now everything seems to be kind of bearish. And if you look at the weekly closing, because today is Friday, and if you look at this is Nifty's weekly closing, if you see again from the top, we are seeing some kind of rejection. Last week we ended in red. This week we tried to move up, again closing in the red. And if you look at this is 20th November 2022, and December, same thing happened. So we are facing some kind of resistance on those levels, and you can see the fall from December 22 to March 23. So that's around 3 months, 3.5 months, and markets have fallen almost close to 2,000 points. Yeah, that is around that. So that was a kind of bearishness we saw once that has happened. So let us see what happens this time. And it seems like we are kind of having some kind of weakness. So Monday's trend will be important. And coming to Bank Nifty as well, you can see the weekly closing. Again, it has ended in the red, and we are facing resistance on the above levels above 44,000, and right from 15th of May. So May, June, and so we have been seeing markets for the last 4 weeks. It has been facing resistance on the upside. So this is the Bank Nifty chart. Let us go into the intraday chart and see what are the levels to watch out for. Again, you already know other levels which we had marked previously. So next support we are looking at, obviously 18,500 with the support, a psychological number as well. It can act as support, but more important supports are at 18,450 to 460 levels, then 18,327. These are the levels I'm watching out. On the downside, up above 18,585, 18,660. These are the levels to watch out. In case of Bank Nifty, 44,151 goes without saying. Very, very important. Keep it as a resistance level. Mark it on your charts. Down below 44,000 is a round figure, so that is where markets ended today as well. Slightly below that, in fact. But 43,750 and 43,470 to 500 levels to be watched out as a support, because markets are looking quite bearish, and US markets are also getting sold off. So we have to see where the US markets end today, and that can give us a trend for the upcoming week. And again, as I've been saying from yesterday, that the risk to reward ratio is now better on the selling side than on the buying side. So a lot of people are shifting towards that slowly, and markets are also changing its trend. So let's see what next week has in store for us. So this is all from my side. Thank you for watching, and have a great weekend.